Hello and welcome back into this lesson. And in this lesson you are going to learn on how to use intermarket analysis. And first of all, we have to understand that the markets are interlinked to one another, and they have to understand also that the whole idea of studying the markets, that is the stock market, the bond market, the commodities and the currencies, the idea of studying them collectively as a whole helps us in our analysis. So gold being a pair which we can say is mostly liked by many people, I can say that the best thing to do with gold is to study other pairs that are connected with it or interlinked with it to be able to find high probability setups. And in this lesson we are going to learn that, for example, when you study gold and the dollar index, you'll be able to find a very good connection between these two pairs, which helps us to find high probability setups. Also, we can look at other pairs that will help us in the intermarket analysis between in gold, in studying gold, especially at such a time. If we look at the Forex, the gold futures, which is, I'll just look at this one. So if you study the gold futures, you'll notice that that gold has been in a bullish trend since the 1970s. So we see that we have been moving higher and higher. And for example, if we are looking at swing highs or liquidity we aim for gold to hit or to take out, or imbalances that we are aiming for this pair gold that it should hit or rebalance into, we find that we don't have that kind of data, since its new record or new prices are being recorded each and every time. So the best thing to do is to use the intermarket analysis, and we'll go back into looking at this, and we are going to look at, this is the intermarket analysis pairs that you can use in gold to be able to study or to be able to find high probability setups, or to be able to help you to help, in short, to help you in your analysis for higher probabilities and high and good quality setups. So for example, when you compare between the dollar index, when the dollar index is moving higher or up, we anticipate that gold will be moving down. Another pair we can use to study between gold or for intermarket analysis is the Aussie and the NSD. So when the gold is moving up, the Aussie or NSD will be moving up, and when gold will be moving down, the Aussie and the New Zealand will be moving also down. Also, another pair you can use to study, and this is especially for anyone who is looking to enter either long-term trades or to find not just long-term trades but high probability setups even in the daily chart. We look at the relationship between gold and the USD card. So when gold is moving down, the USD card will be moving up, and vice versa. So with this, you can go into your markets. For example, let us look at gold and the USD card. So when gold is moving down, for example, let us look at the weekly chart. So when gold is moving down, we anticipate that USD CAD will be moving higher. So this is like an inverse relationship between these two. So we look at USD CAD. So USD CAD in the weekly chart, we also see that while USD CAD is moving higher, the gold pair is moving lower. So we can use this pair to do our intermarket analysis and to find high probability setups. You can see that here when the weekly chart in the USD CAD had an imbalance, we got a retest and then we started moving lower in the previous week here. So when you go to gold, for example, it was at the same time that also gold had this imbalance here, and then we saw this move higher. So that's how we can use gold or these pairs or the intermarket, how we can use different pairs to be able to study the gold pair when we are trading. So we don't trade blindly without doing our intermarket analysis. We use at least another pair too, or different pairs, to be able to do our analysis, see if they are moving together or they are moving against one another. And that's now how we get high probability setups in the market. So that's it for intermarket analysis, and that's it for this lesson.